Right friends, welcome back to Banking Awareness Current Affairs. There is a slight delay of 3 minutes and we regret for that, and let us start this. As usual, this is the second week because tomorrow is holiday, that is why we are presenting this Banking Awareness Current Affairs today on Thursday. Otherwise every week it will be on Friday, and if you look at various aspects, every week we are discussing certain important aspects which occurred in recent times. The first issue is with regard to share buyback. In recent times, several companies offered share buybacks, and here what is the difference between dividend and share buyback? And dividend means when the company is in profits, then dividend is declared to the shareholders. Shareholder means they are having part ownership in the company, or you can say equity shareholders. The shareholders who have part ownership in the company are known as equity holders. So, for the equity holders, then this dividend is declared by the companies when there are into sufficient profits. And the other mechanism is buyback. Buyback means purchase by a company of its shares from the marketplace. Suppose if you take Tata, if 1 crore shares are there in the market, it will purchase 10 lakh crores. So, by paying money, it will purchase 10 lakh shares, and what will happen subsequently? The shares in the market will reduce. So, the earnings per share is expected to increase. So, when the companies are in profits, they can go for dividend, and in some cases, or you can say rare cases, they may go for buyback. So, when the companies are going for buyback, then the outstanding shares of the company in the market will reduce. That is one aspect. And the second important aspect is earnings per share is expected to increase, right. So, why companies go for buybacks? Here there are some tax related issues on the big shareholders. There are some tax related issues when we look at the bigger shareholders. So, for the bigger shareholders, this share buyback may be better choice. And second important point is when the company has got a lot of money, then the best option is to go for expansion, but during some situations the environment or business environment may not be conducive for expansion. Under those circumstances, companies go for buyback, right. Recently some of the software companies announced buyback. So, because of buyback of the shares, what happens? The shares outstanding in the market will reduce, and it is expected to improve per share earnings, right. So, then issue number 2, we are discussing about shares. You see, when by paying money, these investors are purchasing shares. So, here share certificates will be given to them. So, shareholders are also known as equity holders. Equity means basically they are holding ownership in the company. So, by purchasing shares, the investor will become part owner, and these are called equity instruments. So, please understand, if you are investing in shares, then the instrument given to you is equity instrument. Then if the company is performing well, it may declare dividend, and in rare cases it may go for share buyback, what we have discussed just now. So, please remember, when the company is having lot of cash, there are 3 options before the company. One is to go for expansion, second is to declare dividend, third is to go for share buyback. So, this is about shares, and when investing in the shares, 2 terms please do not forget. If the company is performing well, the share value will increase, that is known as appreciation. Because of good performance of the company, if the share value increases, that is known as appreciation. At the same time, when the companies are into profits, they may declare dividend, which is known as income. So, when you are investing in shares, share appreciation may take place, or the companies may pay you dividend. So, both ways the investor or the equity holder will be benefited. And after learning about shares, my mind goes to bonds. And when you are looking at investments, people talk about either shares or bonds. Bonds or debentures. What is the difference between bond and debenture? We will look into a short while from now. You see, you are paying some money and subsequently you will get a bond, and you are the lender, company is the borrower. Please understand, you are the lender, company is the borrower. So, in case of bonds or debentures, the relation is lender and borrower. In case of shares, you will become the part owner of the company, but in case of bonds or debentures, the lender will not have any right except getting back his money with interest. So, in case of bonds or debentures, the relationship is borrower and lender. Bonds or debentures have interest rate which is known as the coupon rate, right. So, this is about bonds or debentures, and please understand, if the bonds or debentures are resold in the market, please understand carefully, you have purchased the bond, I have purchased from you, and in addition to the term coupon rate is the rate on which the original bond value, the interest is paid. But when you are selling the bond or debenture, if somebody is purchasing it, then the income which is expected to come to the second party is known as yield, right. So, please do not forget, coupon rate and yield both are associated with bonds or debentures. Now, I would like to clear your doubt. What is the difference between bonds and debentures? Bonds are normally issued by government establishments, public sector undertakings, and third category is the instruments issued by the private companies when it has got collateral security, then also you can call them as bonds. So, bonds literal meaning is when there is collateral security, they are called bonds. So, in case of government undertakings, financial institutions, big corporations, when they are issuing, normally we call them bonds, and as the security is more in bonds, the interest rate is normally less in bonds, right, in comparison to debentures. So, bonds will have slightly less interest, debentures will have slightly more interest. Bonds are more secure, debentures are somewhat less secure, but in our country these two terms are interchangeably used. And debentures means these are not backed by any specific security, these are issued by companies, normally interest rate is high in comparison to bonds. So, this is clear. Bonds and debentures put together are known as debt instruments. So, please understand. Japan officially recognized Bitcoin and digital currencies as legal money along the lines of other fiat currencies, right. So, here Japan wants to integrate its digital currencies into the legal banking system, right. So, here whoever are purchasing or selling or accepting bitcoins, these regulations must be necessary in Japan. So, Japan is the country which is officially recognized Bitcoin and digital currencies, please do not forget. And about Bitcoin, it is a digital currency and you can call it as virtual currency. It is held electronically, and the important aspect here is this is some form of peer to peer digital currency. No central authority will be there, central banks or no government organization will be associated with it, and they are not printed like dollars or euros. They are produced by the people, and increasingly businesses running computers all over the world using software that solves mathematical problems, and the other name is cryptocurrency also. So, we will have separate module on Bitcoin and cryptocurrency, that will be shortly. Look into the next one. The Reserve Bank of India cleared a proposal to introduce bank notes of rupees 200 denominations. In future, rupees 200 denominations bank notes will come in addition to the present denominations. Then India and United Kingdom have decided, India and UK have decided to set up 240 million growth equity fund, green growth equity fund. Here India and UK, they are going to contribute equally 120 million pounds each, and the total fund is 240 million pound, and it is green growth equity fund. What is the purpose of this? The purpose of green growth equity fund is to finance clean energy projects in India, to finance clean energy projects in India. This green growth equity fund is contemplated. It is the joint fund of India and UK, and it will be a sub fund of NIIF. NIIF is India's first sovereign wealth fund, please do not forget. And another important aspect is it will finance greenfield as well as brownfield projects. What is the difference between greenfield and brownfield projects? Greenfield projects are the projects which are coming up all together at a new place, and brownfield project is improving the existing infrastructure, is a brownfield project. BP Kanungo took over as the Deputy Governor of Reserve Bank of India, and he replaces Gandhi. Prior to that, he was Executive Director of Reserve Bank of India, and for a 3-year period he was appointed. And few things I would like to tell you. As per Reserve Bank of India Act, RBI can have a maximum of 1 governor, 4 deputy governors, and now Kanungo was appointed for a period of 3 years. These things please do not forget. Section 26A of Banking Regulation Act empowers Reserve Bank of India to establish Depositor Education and Awareness Fund, or DEF. So, in examination, if someone is asking about Depositor Education and Awareness Fund, this is maintained by Reserve Bank of India, that is one aspect. And unoperated deposits, unclaimed deposits of more than 10 years duration. So, unoperated deposits of more than 10 years duration, and at the same time unclaimed deposits of more than 10 years duration, they will go to DEF. Right? This is maintained by Reserve Bank of India. This is as per Banking Regulation Act of 1949. So, this is Depositor Education and Awareness Fund. Basically, this money can be utilized for educating the depositors. To move towards less cash transactions, here you see I gave the examples of Muthoot Finance, Manappuram Finance, and these are non-banking financial companies. And to move towards less cash transactions, Reserve Bank of India has prohibited NBFCs. These are examples of NBFCs. Reserve Bank of India prohibited NBFCs for lending more than rupees 20,000 in cash. Please do not forget, in cash maximum only these non-banking financial companies against gold, they can lend up to 20,000. Beyond 20,000, it must be either by check or by transfer. right? Then World Gold Council report says that in 2016 our gold imports were around 660 to 670 tons, and this year it is expected to be 650 to 750 tons. And please do not forget, this 660 to 670 tons figure was pertaining to last year 2016 calendar year, and at the same time India's gold imports a few years ago, if you go back 3-4 years, it used to be around 900 to 1000 tons. They reduced to around 660, 670 tons. Normally, we hear about blue chip companies. What is the meaning of blue chip company? Blue chip company means the companies with the best rated shares. Where the company's shares are best rated, they are known as blue chip companies. So, you can say they will have the highest status as far as investment is concerned. So, these are based on returns on the shares, then yield. Yield means if you are investing in bonds, then yield will come into picture. So, please do not forget, yield and coupon rate pertain to debt instruments. They are either bonds or debentures, and dividend is pertaining to share. This terminology must be in your mind, right. So, here blue chip companies means companies with the best rated shares. Unicorn, this word you come across frequently. Unicorn is the name given to the companies, normally startup companies, normally tech related companies. Please understand, they are normally startup companies or tech related companies, and if they have at least $1 billion plus valuation, $1 billion plus valuation, then these companies are known as unicorn companies. I have given example here, Flipkart, Snapdeal, Ola, Paytm, these are examples of unicorn companies because they are tech related companies. They are startup companies started somewhere around 4-5 years ago or 7-8 years ago, and now their valuation is $1 billion plus. Kotak Mahindra Bank that launched 811 mobile app with over 100 features. So, if someone talking about 811 mobile app, that is Kotak Mahindra Bank. Look into the next one. Reserve Bank of India proposed standing deposit facility. What is this and how is it different from reverse repo rate? Recently, Reserve Bank of India increased the reverse repo rate to 6% from 5.75. Now, if banks are parking excess money with Reserve Bank of India, they will get 6% interest. Please understand carefully, reverse repo means if banks have excess cash, if they are parking this money with Reserve Bank of India, then they will get 6% interest. Then what is the problem? Here the basic problem is in repo and reverse repo, the party has to give government securities as collateral security. If a bank is borrowing from central bank, then bank has to give government securities as collateral security. If bank is parking excess cash with RPI, then RPI has to give government securities as collateral. Now, there is a lot of cash, around 4 lakh crores of cash, or you can say liquidity is there in the banking system. They are flooded with deposits, demand for credit is not there. Under these circumstances, they will keep the money with the Reserve Bank. Now, under reverse repo, they are getting 6% interest. But the point is, if sufficient government securities are not available with Reserve Bank, reverse repo transaction cannot take place. Reverse repo takes place when sufficient government securities are there. Similarly, repo will also take place when government securities are there with the banks. So, what I mean to convey is, in repo and reverse repo transactions, this government securities is the prerequisite for collateral. But the problem comes when there is not sufficient collateral or government securities, then banks cannot park money with Reserve Bank. Under these circumstances, this standing deposit facility will be useful for absorbing excess liquidity. I have given various points here, please go through them, it will be very clear to you. Whatever I explained, they are kept here. Banks can invest in real estate investment trusts and infrastructure investment trusts. Now, banks are permitted two changes, please understand. Banks are permitted to issue masala bonds abroad. Banks require lot of money for their capital needs. By issuing masala bonds, they can borrow money from abroad. So, banks are allowed to issue masala bonds abroad. Masala bonds are rupee denominated bonds, where the currency risk lies with the investor, but not the borrower. And in addition to that, now Reserve Bank of India, during its monetary policy, came up with another instruction. Banks can now invest in real estate investment trusts and infrastructure investment trusts, right. So, they are just similar to mutual funds. Mutual funds means investors like you and me pool up the money with some professionally managed fund house, and subsequently they will invest in companies by applying their brain. Here two things will be there. One is diversification takes place, second one is risk is minimized for the small investor. Similar way, this real estate investment trusts, they will pool up money from investors like you and me, and they will invest in real estate. So, that is a real estate investment trust. And if money is pooled and if it is invested, and if it is invested in highways or expressways, that is infrastructure investment trust. So, real estate investment trust or infrastructure investment trust, they are just like mutual funds. These are all mutual funds examples. So, just like mutual funds, real estate investment trusts, they invest in real estate properties. Infrastructure investment trusts, they invest in highways and expressways. So, money will be pooled up and that will be invested, right. So, banks can invest in rates and InvITs, and investments by the banks will push rates and InvITs, right. But please remember, the maximum limit is 20%. Beyond that, they cannot invest in capital market instruments, or their investments are mostly limited to 20%, right. So, here real estate investment trusts, I already explained you. Here the regulator is SEBI. For infrastructure investment trusts also, the regulator is SEBI. Basically, it is the platform that allows all kinds of investors to make safe investments in real estate sector. Here it is a trust and collects deposits from small investors, and that will be invested in real estate sector, and the minimum investment starts with rupees 2 lakh, and the minimum asset size to be invested is 500 crores, and they invest in residential units, hotels, shopping centers, warehouses, and 90% of the income distributed among the investors via dividends, right. India signed its first loan agreement with the New Development Bank for $350 million, basically for upgradation and rehabilitation or reconstruction of district roads. Please do not forget, it is a Shanghai based organization, otherwise known as BRICS Bank, and KV Kamath is the first president. Then the merger of 5 associate banks and Bharatiya Mahila Bank took place on 1st April, and with this SBI has reached the league of top 50 banks across the world. As per one report, now SBI is 45th largest bank globally, right. Yogi Adityanath announced farm loan waiver, and he announced this waiver of NPAs also to small and marginal farmers, and at the same time please do not forget Uttar Pradesh decided to float Kisan Rahat bonds, and you may have a doubt, small and marginal farmer is up to 2.5 acres, farmer cultivating as owner or tenant agricultural land up to 2.5 acres or 1 hectare, and small farmer is up to 2 hectares or 5 acres. Beneficiaries under Pradhan Mantri Ujjwala Yojana crossed 2 crore mark. Please do not forget, Pradhan Mantri Ujjwala Yojana, the main purpose is basically to empower women and to protect their health. Under this scheme, 1600 rupees per each LPG cylinder is given by the central government, and the total allocation is rupees 8,000 crore, and it is to be implemented over a period of 3 years. So, Pradhan Mantri Ujjwala Yojana already crossed 2 crores, the total target is 5 crores. Rashtriya Vayoshri Yojana, this is basically for the old people, for the senior citizens of below poverty line families. This is a distribution of physical aids. Eligibility is senior citizens above 60 years, and for the senior citizens above 80 years, devices will be given at their homes. So, if someone talks about Rashtriya Vayoshri Yojana, this is the scheme to provide physical aids to senior citizens of BPL category. Right, this was recently launched by the government. Right, friends, we will meet next week, Friday, 21st April, and tomorrow being a holiday, no live sessions on 14th April. So, with this, let us conclude Banking Awareness Current Affairs second session, and this will continue every week. And Monday, please do join for English Made Simple, and Tuesday, Wednesday, Thursday, comprehension ability passages. So, have a nice day. Thank you.